Momentum surrounding AI stocks has continued in 2024, following an unprecedented year in 2023. That being said, SoundHound AI is one AI stock that's gaining a lot of attention, especially after Nvidia disclosed its most recent investment in this stock. So, in this video, I'll review SoundHound AI and answer if this is one AI stock that investors can get behind in 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Interestingly, SoundHound AI stock is down meaningfully off its high. It's trading at $3.82 per share. It's still down from around $15 per share. It peaked at around 2022. This latest surge in stock price followed the announcement that Nvidia was taking a larger stake in SoundHound. It already had a stake, it just increased its stake with SoundHound. Of course, voice recognition technology has a lot of potential and could infuse and increase over the next several years to several decades. There's a lot of room for improvement in this category. If you've used your Siri on your iPhone, you'll know that there's a lot of room for improvement. Siri, given today's day and age, seems incredibly lacking in voice recognition technology and other voice recognition technology I've used. The voice recognition on Microsoft Word, for example, leaves a lot to be desired. Voice recognition in other apps as well. So I haven't really found voice recognition that's really performing well. So there's a lot of room for improvement. You can understand the interest in SoundHound AI to invest in this category, invest in this space to improve capabilities in this regard. Looking at the company's revenue, 38.23 million is up meaningfully from the year before, but still it's a smaller company with growth ambitions. But before we move on, let's take a look at the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. With that big opportunity, you can see SoundHound growing to take a more meaningful share. Right now, it's a very small player in that massive industry. It's trying to carve out its niche, and it wouldn't surprise me if the company has much more growth ahead from here on out. Problem is the company is still losing a lot of money on the bottom line with little improvement to show for it. At least it changed course in the recent trailing 12-month period, losing $80.94 million on the bottom line. That was better than a $108 million loss on the bottom line it demonstrated in the previous 12-month period. However, this is alarming in that the operating loss of $81 million was more than twice as large as the revenue it generated. So that's something I dislike when I'm looking at a growth company when they're demonstrating this much operating loss. I understand there's a lot of research and development going on here. Still, you would prefer to see more revenue to go along with this increase in operating income. Although in this industry, in the AI industry, I wouldn't be that upset with this kind of aggressive investment in growth because of the massive potential we talked about earlier. You would like to see companies get out in front and try and take a piece of this market because it's such a lucrative opportunity. However, it is risky for investors when you're trying to do that without much proven being just yet. Similar story with cash flow from operations, although better improvement demonstrated here from SoundHound. You can see 74.81 million in cash flow from operations in the trailing 12-month period, but that is much better than the negative 95 million, 94 million a little while ago earlier in 2023. So it is improving, making progress towards being positive in terms of cash flow from operations. And that's all I ask for from these innovative growth companies, is to demonstrate progress towards profitability. I understand you're not going to be profitable right off the bat, but at least show me you're making progress. And then looking forward for the next 2 to 3 years, SoundHound has excellent revenue prospects, 50% growth expected in 2024, and then another 43% growth expected in 2025, with both years expected to make improvements on the bottom line. Earnings per share losses expected to improve and reduce on the bottom line. Finally, I want you to consider the importance of valuation metrics like the forward price to sales ratio. The price to sales ratio measures what you are getting for the price you are paying in terms of sales. So what are you getting for every dollar in sales that you're paying? For example, in this first example, the market capitalization is $1.25 billion, and the sales for the previous 12 months were $185 million. That means you're paying a price to sales of 6.76. Similarly, if you look at the expected next year revenue, you would be paying $1.25 billion for $465 million in revenue expected, and that would mean the forward price to sales ratio is 2.69. The factors that influence the price to sales ratio include profitability. Of course, you would be willing to pay a higher price for a company that generates higher profits. That means $100 in sales will turn into $20 in net income for a company that has a 20% net profit margin. That same $100 in sales will only turn into $5 in net income for a company that has a 5% net profit margin. So companies with higher net profit margins tend to sell for higher price to sales ratios, all else being equal. Another thing that influences the price to sales ratio are growth rate expectations. All else being equal, companies that are expected to grow at a faster rate sell for higher price to sales ratios. Similarly, higher total addressable market opportunities tend to result in higher price to sales ratio because investors see this company being able to grow for a longer period of time before hitting the ceiling. And finally, cyclicality. Companies that are more stable and less cyclical tend to sell for a higher price to sales ratio because cyclical companies are seen as being more risky. Companies like McDonald's are seen as being non-cyclical. McDonald's does relatively well whether the economy is booming or whether the economy is in recession. And so investors would be willing to pay higher price to sales ratios for companies that are less cyclical. Investors use the price to sales ratio when a company has negative earnings, unstable earnings that fluctuate between positive and negative, and also the same for cash flow. If a company has negative cash flow or cash flow that's fluctuating from positive to negative, the price to free cash flow and price to earnings ratio are less informative, so analysts use the price to sales ratio. All right, so now that you understand the value of the metric, you can see here SoundHound trading at a forward price to sales of 9.9, which is down from the highs of around 60, which I would argue should never have been that high, but still, this is not a cheap valuation for a company that's yet to deliver profitability or cash flow from operations along with explosive growth. So, all things being considered, I would place SoundHound as an interesting AI stock to put on the watch list, although I wouldn't recommend it as a buy just yet. I would place this stock as a hold or a wait and see. I want to see more progress on profitability. I want to see more progress on revenue growth, and I want to see more improvement in the cash flow from operations and more progress in demonstrating lucrative partnerships that lead to big revenue deals before I'm willing to pay this kind of valuation for this AI stock. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.